Ryan, let's get your diagnosis of what we've seen. Thursday, Friday, the S&P goes down 200 points. We're up about 105 today. So what do we make of this seasonal pullback?
Yeah, first off, thanks for being back and happy Monday, everybody. You think about it, Mike, we went 33 trading days in a row without a 1% move, either up or down. That was the longest streak since before COVID. So to say we were due is probably an understatement. You look just at the last 2 days, yes, probably 2 days now of 1% moves. Just October 13th, little history for everybody. At 89, the S&P dropped like 6% on the UAL LBO deal that fell apart. And then in 2008, this day, October 13th, gained 11%. Mike, I'm not sure why, but there are more 1% moves in October than any other month. After I guess I'll say we've been spoiled with this rally. Maybe some October spookiness and volatility is perfectly normal.
Certainly normal. I guess the question is, did it kind of break the market stride in any notable way? I mean, it's essentially, once you've got the people who are in it because you can't get the market down, and this is a low volatility grind higher, and there's no real use in waiting for a dip to say, okay, maybe we're going to get a deeper pullback.
You're right. I love the discussion with Paul a little before I came on. He talked about some of the internals that are weakening. I look at things like regional banks. Those are lagging big time. Housing's lagging big time. Look at high yield credit, right? That's starting to crack. So by no means are we saying there's this big monster under the bed. But, Mike, there are some little things that have me concerned. And the last one, put to call ratios, they're quite optimistic. And from that contrarian point of view, I just think it makes sense after a 36% rally in 6 weeks. Maybe we're due for just some, I guess, a Charlie Brown shirt type of volatility.
You mentioned 35% up in 6 months,
Yep.
right? So I wondered if we were also suffering from a little bit of anniversary-itis in the sense of, wow, look at this massive 6-month move. Obviously also just hit the 3-year mark of the current bull market with some great gains, although maybe not, kind of middle of the pack on the 3-year anniversary. But what can we expect from here as the bull market matures?
Yeah, we're still pretty optimistic, have been for a while. You look at, there's been 5 other times we've gained more than 35% on the S&P in 6 months. 1 year later, higher every single time, up like 13% average. I know some other guests have pointed this out. I'll just mention it. Once you get a bull market that gets to this point on its 3rd birthday, there's been 5 other ones back to 1950, all right? The shortest any of those other bull markets went was 5 years. The average, Mike, was 8 years. So listen, the reality is this is a strong bull market still, and to think it's just going to be over because we're here and it's 1929 or stocks are overvalued, we're not minimizing that, right? Earnings are still strong, profit margins strong, a dovish Fed. There are still reasons to think that this bull market's alive and well, and it might last longer than a lot of investors expect.
Yeah, I mean, now granted, that's what the math says, although it owes a lot to 2 very, very long bull markets, right? I mean, one that began in 87, the other one in 09. Fair enough. I guess the question is, where within the market, I mean, are you looking for some leadership transitions, large to small, away from growth to value, or stick with the winners?
We're sticking with who brought us to the dance, I guess we'd say. We still like industrial, still like cyclicals, financials. And we do like large over small. No small's coming back today. We just think the Fed's probably not going to cut quite as much as what the market's expecting the next 15 months or so. I mean, there's still a lot of opportunity, right? When in doubt, diversify it out. It's been a great year to have a diversified portfolio. We're not changing that at all. We'd still just be overweight equities with a little bit specifically of developed international. We've liked that group for a while. Still don't think that one's over as well.
Yeah, that's right. So it has obviously been a global move as well. Quickly, Ryan, earnings growth for this quarter, probably not as underestimated as prior quarters.
It sure isn't. You look at the pre-estimates, right? Actually, a positive pre-estimate on average. We haven't seen that since, I think, late 2021. So a lot of good news is out there. So that's something. Maybe the bar is a little bit higher. But once again, I think earnings will probably come in better than expected. It's just how much better, because there is a little more optimism this earnings season than really the last several years.